Good morning, I'm Adam Davis.
And I'm Tanaka.
And we're making millions over morning coffee. Today I want to talk about something that's extremely important for both investors and American homeowners. And this is something that the greatest investor of all time, in my opinion, Warren Buffett, talks about. It's something his mentor taught him. And that's called emotional intelligence. What is emotional intelligence? Emotional intelligence is the ability to make rational, conscious, and well thought out decisions in spite of all the chaos and activity and noise that's going on in the marketplace around you. See, there's a misnomer that's thrown out there by a lot of popular media, especially in the stock market side of things, and that's called the quote-unquote wisdom of crowds. Now, if you think about that for more than a second, you're going to see that that's the biggest oxymoron in the world, the wisdom of crowds. Because if you look at how most people gain wealth, because truly wealthy people in America only represent about 1 to 2% of the population. And when I talk about real wealth, I mean people that can live beyond several years without working. Because that's the definition of wealth. How long can you live without physically working? A very small percentage of America is wealthy. So that would tell you, just looking at that if a small percentage of America is wealthy and the crowds are all doing something else, then there really isn't a lot of wisdom in crowds, that the wisdom is in doing almost the exact opposite of what everybody else is doing. This is how some of the popular notions in finance and investing got coined, such as buy low and sell high, or as Warren Buffett likes to say, buy cheap and sell dear. That means that you need to be greedy when others are fearful and fearful when others are greedy.
Adam's exactly right. For the last 24 months, there's been an absolute foreclosure boom in Metro Detroit real estate. Everyone that I've talked to, besides a small select group of people, thought I was crazy 2 and 3 years back. As the market was sliding, we were slowly buying more, but selling fast also to other investors or to people who wanted to live in a home and they could get it for a lot less money than they could at one point. So they were buying more equity. And as it has sloped down and down and down, more and more people are starting to get excited because it's actually getting tougher right now, today, for us to buy houses. There's been more deals that have gone highest and best, which basically means that people are now bidding up the price of some of these foreclosures. Now that was something that we haven't experienced in the last 9 to 12 months, for sure. So what that tells us is, a little bit of it is that the sun shines back out at 70 degrees here now in Michigan again, which makes us happy, helps us be a little bit more cheery. But the real thing that tells us is, the indicator is, as people are starting to buy and buy and buy, does that mean it's time for you to ease off a little bit and sell? But there's going to be a bounce, and I think that we still have a good 6 to 18 months until we really truly feel the bottom. So it still is time for us to invest right now.
Dylan brings up an excellent point because he touches on exactly what emotional intelligence is all about. When everybody around you is telling you to do something else, do you have the strength of your conviction to hold to what you believe is going to be a proven money-making strategy? Once you outline an approach for building long-term wealth for yourself, can you stay the course? Can you stay the course when you buy a property, say, for 50 cents on the dollar, and then you see properties drop further to 40 cents on the dollar? Do you have the emotional intelligence? Do you have the guts to stick with it? Can you pick up another house at $40,000? Can you pick up another one at $30,000? And then have the strength of your conviction to know that those properties are worth $100,000 plus. And when this market comes back, driven by strong underlying economic conditions, that you're going to be able to ride an amazing tide of wealth creation as the market comes back, and now you have $60,000 in equity on the $40,000 house, $70,000 in equity on the $30,000 house, and your wealth is just effectively multiplied again and again and again because you had the strength of your conviction. Let's look back in history at other real estate markets where investors went in, picked up undervalued assets when everybody else said, hey, wait, it's crazy. Everybody knows, that's a student of financial history, that there was a big savings and loan crisis in America in the late 1980s. There was various regulatory changes that happened that caused savings and loans, which are financial institutions that are regulated, to start to go belly up. These savings and loans started to go bad, and a lot of the assets that they had loaned against were bad. A lot of commercial developments in various parts of the country, Texas, the Southwest, Arizona, some of these places come to mind. They were basically going bankrupt, these savings and loans were, and they were forced to fire sale their assets just to stay in business. Well, lo and behold, they couldn't get rid of their assets fast enough, and these savings and loans started to fail. The federal government had to form a special entity to go in to try to bail out these savings and loans to protect the consumer. Now, everybody said that back then that, whoa, commercial real estate's a bad move. Stay away from it. Well, what happened is the savviest investors went in against the crowd, against the grain, against conventional wisdom, bought up strip malls in places like Dallas, Texas, Austin, Houston, Albuquerque, New Mexico, Phoenix, Arizona, even Southern California, Las Vegas, Reno, parts of Colorado, scooped up strip malls, scooped up mall properties, scooped up vacant land that was developed into some of the biggest booming subdivisions in the Southwest for literally pennies on the dollar. Now, sometimes when we say pennies on the dollar, we mean 30 or 40 cents on the dollar. In this case, it was literally 2 or 3 cents on the dollar for some of these commercial real estate investments, and now these are some of the wealthiest investors that you will ever see or hear about in America right now.
The reason that we became Michigan real estate experts is exactly what Adam is talking about today, is swimming upstream. As I said a few minutes ago, 2 and 3 years back, people thought that we were crazy. But we own those houses that are now 2 and 2.5 times what we can buy them for today. So what are we going to do? We're going to keep buying. We're going to keep buying them lower and lower and lower. Like we talked about a few shows back, it's similar to dollar cost averaging. However, you're doing that with a $100,000 asset now. You're not doing it with a $31 stock that you can buy at 22, so that brings you somewhere into 26. This is about building extremely huge amounts of equity right now in Michigan real estate. So I challenge everyone out there to take a look at www.reiaofmacomb.com. That's the Real Estate Investors Association of Macomb.
And if you want to know more about myself, again, my name is Adam Davis. You can find me on the web at www.adamjdavis.com.
And you can find me at www.dylantanaka.com.
And check back with us regularly at Michigan Income Properties and at mirealestate.tv, because we're helping you make millions over morning coffee.